Welcome, trader. I know it have happened to you. In fact, it have happened to every trader out there. Okay, you enter a market, and before you know it, the market just reverse. You enter a market, and the market just start going against you. And sometimes it kind of make you wonder, like, what am I doing wrong? What exactly am I doing wrong? Is the market against me? Are my village people against me? So today I'm going to teach you how to spot market reversal so that you can know how to avoid it. Okay, because if you can spot when market is going to reverse, then you can avoid trading at that moment, or you can decide not to trade in the direction. You understand me? So we're going to dive quickly into that. So this is NZD USD, okay, and we're just going to look. So the first thing I want you to take note of, first thing I actually want you to do is you have to take note of what? Of key levels, right? Key levels in the market. The market like reversing at key level. The market love reversing, especially at key level. Okay, so when you are looking to take a trade anywhere, you have to look at, okay, this place I'm taking this trade from, is it a key level? Let's say you wanted to buy. Okay, so you wanted to buy. Let's say the market is going like this. Okay, and the market is here, right? Let's say the market is here. Okay, and you wanted to buy this market. You have to ask yourself, this place I'm taking this trade from, is it the perfect place for me to buy? Because if you look, there's a level here, there's a key level here. There's really nothing preventing this market from hitting this zone and falling down. Do you understand me? Because the market loves to reverse, especially at key level. So you cannot be taking a trade here. You cannot be taking a buy trade here when you know that there's a zone here that the market might actually touch and start going down. So this is the first thing you have to take note. Look, ask yourself, this portion that I want to take this trade from, is it a key level? Okay. Now, there are two kinds of key levels, of course. There can be bullish key levels and bearish key levels. So if this market was around here, let's say this market came down to this portion and you are looking to buy it, that is a good one, okay, because this is a level where the market could actually hit and start going back up. Okay, so this is a key level for bullish potential. This key level has a bullish potential. You understand me? But then you cannot be taking a sell here. Okay, you cannot be coming to this portion and taking a sell. Now, most times the problem is that people are actually trading in a lower time frame. Okay, so if this was a 1 hour time frame and you were in a lower time frame, let's say maybe a 5 minutes time frame, of course this portion is going to be like you are still in a downtrend, not knowing that the portion you are in, this downtrend, is actually a zone within a bigger time frame. I don't know if you get me. Okay, so let's just look at an example. So let's look at, this is NZD-USD, right? Is there any key level here? Let me look. Okay, let's check the higher time frame. The higher time frame, okay, you can see NZD-USD in the higher time frame. You can see that, okay, you cannot actually start buying at this portion. Okay, at this point. Why? Because if you look back, you see that there is a key level here. Okay, let me use a rectangle for it. So you can see that there is a key level here. Okay, so you cannot just start buying here when it's very likely that market is going to reverse. So imagine somebody that bought here now, market just went to small and started come down again. So you'd have probably hit your stop loss already. Do you understand me? So you have to take note of key levels. If anything, you should actually be looking to probably sell at this key level. So what I'm saying is now that the problem is that most people are trading in a lower time frame. So if you were to go down to, let's say, a 30 minutes time frame, if somebody was looking at this time frame alone to make his buy, you can see that this time frame was still bullish as at this point. Okay, but this point was what? Our area of what? This was our area of value at the higher time. That's our key level at the higher time frame. Okay, so that's why I always tell people that, okay, before you take a trade, at least try to see what's happening in the higher time frame. Because if you are buying here now, or you are buying here, or you are buying here, or you are buying here, you're actually setting yourself up for what? For danger. Because look what? After the market went up, it started going down, and it would have probably hit your stop loss. You understand me? So take note of Of key level. When you are taking a trade at any time frame, try to look at what's happening in the bigger time frame. Okay, look at what's happening in the bigger time frame before you take the trade. So that's the first way you can actually avoid being in the market when it just reverses. So the second step is, so the second thing I want you to look out for is the candlestick. Okay, candlestick is the language of the market. Now, as you advance in trading, you're going to notice that it's not just candlestick. There are other things you have to look out for. But for now, you should understand that candlestick is actually part of the language of the market. And what the candlestick is saying, you have to actually pay attention to it. And the major candlestick I like to tell people to look out for is the hammer candle, okay, and the engulfing candle, right? The engulfing candle. So it can actually be also in form of an inverse hammer, or some people call it a shooting star, and what? And a bearish engulfing. Okay, bearish engulfing is going to be like this. Okay, the bearish one candle is going to be engulfing the bullish one. So these are candles that you can actually look out for at your higher time frame to see if the market is actually going to revert at this level. So if you go to let's say a 1 hour time frame, a 4 hour time frame, you're actually going to see a candlestick here. You're going to see a candlestick that is already that's telling you that what this market is very likely to reverse. Okay, so let's look at the daily time frame. Okay, you're surely going to see a candlestick that tells you that this market is very likely to reverse. And if you zoom in here, you're going to see, you can see that there was an inverted hammer at this portion. You can see it clearly. Okay, you can see it. So this is already giving you a signal that, okay, I can't be entering a buy at this portion again. The signal is not really clear. Like to buy at this moment is not really a good one. It's not really a good move. Okay, and if you go further, at the ending you saw that it made something that looked like a double top. Okay, a double top followed by what? A bearish engulfing. So you can see the signal is clear that this market here is going to reverse here. So anybody buying at this point is actually setting his or herself for danger. Okay, so the text now also wants to look out for is the break of structure to the opposite side. Okay, once you see this break of structure, I usually talk about 3 break of structure, but usually 2 is also enough. Once you see 2 or 3 break of structure to the opposite side, do not enter that trade. Okay, especially if it's at an area or a key level, an area of value, do not enter that trade. Why do I say that? Now, a break of structure is just the way the market tells you that it's about to change direction. So from the day time frame, let's move to the 4 hour time frame. Let me show you this. Okay, so if you look here, what did the market actually do? Okay, it was going up and what? And started from here, it broke. Okay, it broke this portion, 1, came back, broke again, 2, came back. Okay, look at this way. Okay, came back and what? And it broke it again. Okay, it broke it again. Basically, that is 3. When you see this, it's already telling you that what this market is very the chance of this market reversing now is about 80%. Okay, so the market is very likely to reverse. So the first one is what you have to take note of: key level. This trade I'm taking now, is it at a key level? Okay, look out for it. Then secondly, you look out for candlestick, okay, or chart patterns that tells you otherwise, that tells you that okay, this market is actually very likely to reverse. And the third one, you have to look out for the break of structure, the language of the market. What is the market telling you? Is it giving me a shift to the opposite side? Then if it's giving you a shift to the opposite side, then you have no base. You have no reason. There's no reason of you entering that trade because you are going to be setting yourself up forward for loss. Okay, so this is how you can actually tell if the market is going to reverse. Okay, now for you to be watching this video to this very point, it shows that you are an intentional trader, you are a serious trader, and I'm going to be giving you a benefit. For the next 3 days, I'm going to be giving out my trading ebook, the beginner, the intermediate, and the expert session, my premium trading ebook, for 1/3 the price. Now this ebook usually costs $150. Okay, so I'm going to be giving that for just $50 plus 20 minutes free live session with me, where you ask me any question you have at all regarding trading. We're going to schedule a call at your convenience where you get to speak with me physically for 20 minutes. Now this is from now to the next 3 days after posting this video. And secondly, I'm giving a 50% discount on all my mentorship program, ranging from the lifetime mentorship to the 3 months mentorship. I'm going to be slashing it by 2 from now to the next 3 days. So like I said, if you are serious about trading, this is your opportunity. So this is for today's video. Don't forget to like and subscribe, and also share this video to your friends and all those that are struggling with trading, so they can also learn from you. Do not be greedy with knowledge. So don't forget to like and subscribe. Until we meet again, peace.